Okay guys, welcome to the channel. This is Ebro Trades. Today we'll be going over a simple Nasdaq strategy with a very high win rate that I've been using for the past 2 weeks or so. I found it's really performing really well, and so I thought, let me share this with the guys on the YouTube for free. Let me try and drop some sauce on these guys. Let me help them out. So it's going to be a really quick video. I'll run you through the setup really quick. Essentially, we're setting our time to New York time, UTC -5. We're identifying highs and lows during London AM session. For the purpose of this setup, I'll be using 3 to 8 AM UTC -5. I'll be looking for a break of that high or low in the New York session AM, which is 8 to 12 UTC -5. If the high or the low of London session is swept, we're looking for an order block, we're looking for a fair value gap, or we're looking for a trade entry based on a significant market structure shift plus break of structure. If everything I'm saying right now sounds like a whole bunch of jargon, then I suggest you go and watch my past videos where I cover all these concepts. Depending on the reaction to the PD array that is formed on retracement, we look for either a continuation trade or we look for a reversal trade. Our first TP is set at 2RR. I am a very simple day trader. I don't like to overcomplicate things. I don't like to give you guys a whole bunch of fancy animation. The way I format these videos is so that you spend as little time as possible watching the video and you head to the charts and start backtesting as quickly as possible. I'm a no BS guy. Now, you've got the setup here. I suggest you take notes, you copy this down into your notebook, into your notes app, and let me quickly head into the first example. But before I do, let me mention that the Ebro Trades Academy, which is a clear step-by-step path to going from where you are now to becoming a profitable day trader with me holding your hand through that journey, is linked in the YouTube description below. Spaces are open right now. Usually it says waiting list because it just fills up so quick, but spaces are open for 2025 right now. Includes a lecture style course. There's a weekly live call. There's trade reviews. There's a private Discord, and there's me. And I'm someone who has been day trading literally for a living for I think going on 5 years now. So, stop wasting your time on YouTube. Stop watching thousands of different creators. Treat this like a university degree. Get the course, watch the lectures, get in the weekly calls, ask your questions, build, measure, learn. Improve your strategies week on week, pass your first prop firm challenge, get your first payout, and start trading for a living. Don't treat this like a hobby. Okay, so spaces are in the description for that. Let me quickly get into the first example. So example one is a trade I literally took last week. So this was, or actually this week. No, it was last week. So it was the 11th of February. So it's literally 2 days ago. So literally all I did was set my time to UTC -5. As you can see over here, it's set to UTC -5. I identified the most recent high and low during London AM session. So this is 8 a.m. Just before 8 a.m., I looked for the most recent significant high and low in London session. So here's my low, here's my high. Then what did I do? So as soon as 8 a.m. hit, I am now scanning from 8 to 12. I'm looking for the high or the low to get swept. What happens here? I see, okay, price sweeps the high. So you can see over here, we sweep the high. I mean, let me make it clearer for you guys. So we can see low is swept. Apologies, low. So we can see that the low is swept. As soon as I sweep the low, what does price do? Price continues down. But then what does it do? Retraces. These arrows are so terrible. Let me get rid of this arrow because I feel like I'm confusing you guys. Wait, let me quickly get rid of this. So let me quickly get rid of this arrow. So, okay, what happened? We swept the low. We sweep the low. We then retraced back within the region and formed this massive fair value gap. But one notable thing, we've got a low. Let me get rid of this arrow. We've got a lower low. We then formed a higher low. So as soon as we went from lower low to higher low, I know that there is a market structure shift from bearish to bullish. I am now looking for an entry to go long, targeting the high. Now, in this particular case, I know that a small fair value gap was formed here. So this over here is a very small fair value gap. And I see that when we hit the fair value gap, we continued straight through. So as soon as I see that we are disrespecting the fair value gap, and we know that there is not going to be a reversal off the fair value gap, we're not going to bounce off it, we're instead looking for a continuation trade, I immediately go long. In my case, I went long over here. So I waited for this massive fair value gap to pass as well. I noticed there was a clear market structure shift from bearish to bullish, and we're back in the range. So I quickly marked out my entry. My entry was for 2RR. So as soon as this candle closed, I entered over here. I went long. And this was the trade I took, literally. Like, I haven't touched the charts since I took the trade. I put my stop loss within the fair value gap, and I targeted 2RR. And I'm super realistic. Like, I don't go for 1 to 5, 1 to 10, 1 to 20 trades, because that would be a lie. I'm a very conservative trader. We targeted 2RR, hit my first TP, and I closed the charts for the day. It's a very simple trade. You could, bear in mind, you could also have taken the trade off retracement into this fair value gap. So this right here is a massive fair value gap. And you could have taken the trade off of retracement into the fair value gap somewhere here, placed your stop loss just outside the fair value gap, and placed your TP at 1 to 2. Because I think in the long run, but like, it would have taken ages to hit your TP, but you would have hit your TP. So 1 to 2 is around here. You would have hit your TP. Would you hit? No, you wouldn't have hit your TP. Well, you would. You would have hit your TP if you moved your stop loss and made it slightly more conservative. So somewhere around here. You would have hit your TP after how much time? Let's see. So you would, okay, you would have hit your TP almost straight away. Wait, let me straight. Yeah. So it would have taken you a couple of hours to hit your TP. But that is not the entry that I took. As soon as I saw this convincing market structure shift from bearish to bullish, as soon as I didn't even wait for retracement into the fair value gap, though, as I just said, you could have taken trade off of the retracement, but I didn't do that. And that's it for the strategy. Let me quickly go into another example of a trade I took using the exact same strategy. This was on Monday, the 10th of February. Literally two of the exact same setup in the same week. I've marked out 8 a.m. UTC -5. I've marked out the most recent significant low, the most recent significant high. What happens? As soon as 8 a.m. hits, I'm waiting to see if the high or the low are swept. I see that the high is swept and that a order block is present in that sweep of the high. So I mark out the order block. What else do I see? I see also a fair value gap is formed in this sweep. All right, I wait for price to retrace into the fair value gap and the order block. I see the fair value gap is disrespected. Price penetrates the fair value gap, so I delete that, and then I wait to see behavior of the order block. As soon as I touch the order block, I see there's a big wick on this bearish candle. Looks like a doji type candle. And then I see this blue candle. As soon as I see a blue candle closing, I know we're bouncing off the order block. We're respecting the order block. And so straight away, I took my entry as soon as this blue bullish candle closed. So my entry, and by the way, I literally haven't touched the charts since I took these trades. And I just kept my markings on because I knew I'd make a video out of it. Because the trades were just so perfect. I went for 1 to 2 for my first TP. So my TP1 was at 1 to 2. This is where I closed 50% of my position. I closed the rest of my position at 1 to 3. And if I was a bit greedy, honestly, I could have taken it all the way up to 1 to 4. But that's not what I did. So this was my trade, literally. I waited for the high to get swept. I marked out my order block and my fair value gap. I waited to see how price would behave when we retrace into our PD arrays. I saw that the fair value gap was disrespected, but the order block price bounced off of, and that was reasonable grounds for me to enter a long trade targeting 2RR. That is it for this strategy. If the video is too long, or if you're a fast learner, or if you're super familiar with my strategies now, I suggest you go straight to the charts and backtest this. If you're someone that needs, more assistance, leave your questions in the comments. I'll try to answer them. And if you're someone who's serious about genuinely becoming profitable, I can't recommend enough that you join the mentorship with the link in the description. Please like, comment, subscribe. And yeah, I appreciate you guys. Enjoy. Peace.